Good morning, welcome to the look ahead video for the week commencing Monday 20th of May. Now normally we start these videos looking at a deviation that we've had recently providing a high probability opportunity. But recently, over the last week, we haven't had a high probability opportunity, and that just underscores the fact that we're not looking to trade for the sake of trading. We're only looking to trade high probability events which put the odds completely in our favor, and they don't come up all the time. You might get sort of 3-4 opportunities in a month, sometimes a bit less, and sometimes you'll get a quiet week like we've had. However, the week ahead is ripe for potential opportunities, so let's see what we've got coming up. So Monday is a very quiet session. There isn't a lot on the calendar. We've got the Chinese loan prime rate, and an unexpected cut in that rate can boost sentiment. So watch out for that early Monday morning. If we see unexpected loan prime rate cuts, that will be supportive for risk generally and would typically boost stocks early Monday morning if we saw that. But it's not something we're looking for as a tradable opportunity. For the 21st of May, on the Tuesday, we've got the Canada CPI print. Now, this is interesting. The Bank of Canada, at their last interest rate meeting, kept interest rates unchanged. And what Governor Macklem has said recently is that he wants to see insurance that underlying inflation is falling and will be sustained lower. So if we just take a look at core inflation, look, it's 2%, so that's definitely falling. Excuse me. And the headline is coming down 2.9. It is falling. But Governor Macklem said that they want insurance that the underlying inflation is falling. So they want to be convinced. And Governor Macklem also said that it doesn't need to wait for inflation to be at 2% before cutting rates. At the moment, short-term interest rate markets, they see about a 45% chance of the Bank of Canada, 44% chance at the moment, cutting interest rates on the 5th of June meeting. So that means this economic calendar point will be very important. If we see the inflation surprising to the downside, that gives the kind of assurance that the Bank of Canada want, and we'd likely see some heavy Canadian dollar selling. Likewise, if the inflation print surprised to the upside, then that wouldn't be the insurance that the Bank of Canada wants, that Governor Macklem wants, and so we'd likely see some strong CAD buying. It's definitely one to look at. We could get a high probability opportunity there on Tuesday. We carry on with the inflation theme on Wednesday overnight. We've got the RBNZ interest rate decision on Wednesday. Now, at their last meeting, they didn't surprise markets. It was kind of as expected. And there's no surprise expected for this meeting. You see, they're expected to keep rates unchanged once again at 5.5%. Now, the only thing to be aware of is that the latest inflation data out of New Zealand has been more sort of firmer than the RBNZ forecasted. The first quarter 2024 data was 4%, so it's still, well above that 2% target. And the the quarter-on-quarter rate was 0.6%. So the year-on-year rate, 4%. So this was firmer than the RBNZ had forecast, and it does put a bit of pressure on the RBNZ to potentially need to keep rates higher for longer. So how will they respond to that rising inflation? So if we see the RBNZ bring forward, or if they suggest that there could be a third quarter hike in their projections, then look for sudden New Zealand dollar upside. So if the RBNZ bring forward a potential hike, still, if they see a hike that's needed in the third quarter, then look for that to lift the New Zealand dollar. If we just take a look at short-term interest rate market expectations, you can see that they're expecting interest rate cuts, and they're expecting the first cut around sort of the first quarter of 2025. So if the RBNZ signal hikes and a potential hike coming, then look for immediate New Zealand dollar gains and Aussie New Zealand dollar downside. Similarly, if they downgrade growth projections, if they play down the inflation risk and say, oh, we're not too worried about it, and if they push their official cash rate projections to a first quarter 2025 cut, then look for New Zealand dollar downside. So there's two-way opportunities here if we see a surprise from the RBNZ. As I said, no surprises expected, but it's just one to keep on our radar with that inflation data picking up more than the RBNZ were projecting. Will they respond? Will they react? Will they signal anything to the market? The market will be very sensitive to any signaling. UK inflation data, bright and early on the Tuesday morning. Now, this is going to be a very important inflation print. The UK inflation data, you can see coming down 3.2%, and the core reading, let's just, there we go, let's just get the core reading up here. .2. Now, the last Bank of England meeting was quite interesting. We had the Deputy Governor, Dave Ramsden, signal a rate cut. You can see here that the bank rate was left unchanged at 5.25%, but Ramsden voted for a rate cut, joining DINGRA. So now we've got two members
just to make you aware, we are
who are voting for a rate cut. Very interesting. Now, will we see a big CPI miss that will bring some of these other more neutral members also voting for a rate cut? Now, the pound is at a very interesting point. What we've seen Bank of England Bailey said the path to rate cuts are open after the March Bank of England meeting. We then had the pound sell off. We had Ramsden agreeing with Bailey. We had Green agreeing with Bailey. Then we had the Chief Economist Pill pushing back against the rate cut narrative, and that allowed the pound to push higher. We then had the May Bank of England meeting, and what the Bank of England have done, they've revised CPI inflation projections lower. So 2024 CPI, they revised it to 2.5%, down from 2.75%, and 2025 CPI, they've revised it down to 2.25% from 2.5%. So the Bank of England are saying, okay, we're confident we're winning the inflation battle. Chief Economist Pill kind of agreed that the Bank of England made good progress on inflation, and that just allowed a little bit of weakness to come into the pound after the latest Bank of England meeting, pulling back now. But the market wants to have a high conviction pound sell opportunity. Where that might come from would be the CPI print. If we see this coming in, look, what a great print that's expected here towards the target. 2.1% is expected, down from the prior of 3.2%. Hooray, hooray. If this comes in even lower than markets are expecting, there will be champagne corks popping in the Bank of England. Excuse me, I just get my screen back. There will be champagne corks popping in the Bank of England if we see this coming in below market's minimum expectations. It's one to watch. Then as we carry on through the week, the next sort of, bond auction was worth looking at. Is there still good demand for bonds at the current yield price? That can impact the dollar if there's a surprise there. Japanese data is not going to be that important apart from any CPI data, which we will keep an eye on. Then we've got some Eurozone and UK flash PMIs coming out early Thursday. Could be a good opportunity here in the Euro Pound. ECB, they're in a situation where the base case is that they're going to cut in June, but markets are a bit unsure what happens beyond June. So if we saw a very surprise print to the upside, this could give us a nice little short move higher in the euro, and Euro pound gains could continue if we see a miss in the UK data. So I'll be looking for a potential opportunity there in the Euro pound, depending on what happens. And don't forget, we do get the French and the German data coming out earlier. So that will be important coming out on the Thursday. Just want to check, I haven't missed the Japanese inflation data. Yeah, okay, here's the Japanese inflation data coming out early Friday. Now, there's sort of increasing expectations that the Bank of Japan is going to be moving towards higher interest rates. So if we see a nationwide CPI print that comes in above market's maximum expectations, that'll put a bit of extra pressure on the Bank of Japan to keep hiking interest rates. So you'd expect a little bit of yen strength. It may not last long, but it would be worth looking at if we do see a very hot print. If we see a very weak print and we see yen weakness, watch out. The higher the dollar yen goes, the more likely we are to see to Bank of Japan and Ministry of Finance intervention around the 160 level is where they're said to be very, very interested. Then we've got German GDP data, UK retail sales. Maybe worth looking at, not expecting much of a reaction necessarily here. A surprise beat in German GDP print can lift the euro. Germany is obviously the powerhouse of Europe, and what's good for Germany is good for Europe. Looking at the retail, Canadian and UK retail sales, not expecting much from that. Might get a little pop in the CAD depending on what happens with the CPI print. So we'll make an assessment nearer the time, and we'll have anything significant up on the cheat sheet. And the University of Michigan, this is the final sentiment reading, so not expecting much. We had the preliminary reading, which was a miss, and that did hurt sentiment towards the outlook for the US consumer at the first reading this month. Aside from that, this is the week. There's some nice potential opportunities scattered through, so it's definitely a week to be paying attention to, and we'll update you as we go through with anything significant and keep the cheat sheet updated. Thanks, and have a very good week.